All right, everyone, what is going on? Today we're here to talk about Fundrise. So this is just a beginner overview of Fundrise, tutorial about it. If you don't know what Fundrise is, it is crowdfunding real estate. So basically you will invest in this company and they'll take your money and invest into private real estate where you wouldn't usually get a chance to invest in type of real estate unless you are a big accredited investor. But now companies like these really bring that to life with people as less than $10 you can invest in real estate. So it's basically crowdfunding real estate. So let's get into it. So now the difference between crowdfunding real estate and a REIT. A REIT is a real estate investment fund trust. So basically you'll go onto whatever brokerage you have with a REIT and you'll buy that stock and you'll buy that REIT. That REIT will take that, buy properties with it. They will collect rent, or the stock will appreciate, and they'll give it back to their investors. Now with a REIT, it's not very diverse. With a REIT, it will essentially match the stock market overall. So you're really not diverse. It's really going with the stock market. So if the stock market's going up and it's doing well, a REIT will probably do well as well, and probably a little bit better. And if the stock market's going down, that REIT's probably going down as well. So really, you're not really as diverse as, like, if I was going to buy a stock, it's really the same thing as a REIT. It's going to follow the stock market, and really you want to be more diverse with your investments. And really, like, if stocks are down, I want my real estate to be up. Or if stocks are up, I want my real estate to be up. But, like, you want to be more diverse. And really, with crowdfunding real estate, you have your investors, and they will go to online platforms like Fundrise, which we'll talk about. And Fundrise will take your money, which are sinking finance for people, investors. They'll come to their site, take your money, and then invest it into real estate projects. And then their returns on these real estate projects will be cycled back to the investors. And also, if it's if it's like apartments and stuff like that collects rent all the time, you will get some of those rents as basically dividends. So there's difference between crowdfunding and REITs. And crowdfunding, it's not going to go with the stock market. It's going to go with how real estate is. Now, when you sign up for Fundrise, there'll be 3 plans you'll have to select. Your first plan will be supplementary income, which really, if you invest in this plan, you will be focused more on the income side of things. So your money will go more to maybe apartments or other different things that will bring more income. You'll still have appreciation on those things, but it'll be more focused on income. And your balanced investing, obviously what sounds like balance, you'll get some income, some appreciation. It'll be kind of a mix. And then with long-term growth, you're not really more focused on income, but really you're more focused on return and the growth of those properties in the long horizon, 5, 10, 15, 20 years. So, and within those investment plans, you'll have different things. So you have fixed income, core plus, value add, and opportunistic. And really, as you can see, the relative low risk, the higher it is, the more growth you will see with that. So fixed income is the lowest and it goes all the way up. All right, now with this dives deeper into it, like fixed income. You'll typically receive around a 4 to 8% gains on these. And as it goes up, you might receive up to 10% gains on the highest, which will be more your long-term growth. Then value add 8 to 12, core plus 6 to 10. And the risks of these go higher as they go. So fixed income is going to be your low risk, very safe investment. And as you go up, it'll be a lot higher risk, less safe an investment. So, and then why you want to invest in private real estate. So as we say, this is basically private real estate. When these companies weren't around, you wouldn't have a chance to invest in real estate like this unless, like I said, you're an accredited investor or a very high net worth or new people in this thing. Fundrise is bringing that to you. For as little as $10, you can invest in real estate. Now, private real estate, as you can see on the right side, has strong, stable, passive income. And private real estate is 6.1% compared to REITs, which is 5.4%, and then bonds and stocks are a little lower. Then as you can see on the left, the risk is less than stocks and REITs, and they have a little bit slighter less gains in REITs, but more than stocks, and obviously better than bonds. And with Fundrise investment portfolio, you can see they have a large number of properties and a lot of property. They have 200 in this current time period recording this video. They have 257 active projects. They have 2.8 billion net assets under management. And they have 7 billion total assets transacted. And as you can see, 47 of them are apartments. 12 is opportunity. 29% is fixed income, and these are your different strategies within your investment plan that you will choose. Now, with the gains with Fundrise, what gains you will see and what growth you will see when investing in this. As you can see in 2022, quarter one, we're only up 3.4%, but compared to public stocks, they're down 4%, and public REITs are down 5%. And in 2020, they're up 7% compared to -5 and 18. Then 2021, they're 22 compared to 39 and 28. And their worst quarter since Fundrise has been in business is only up 1.15%, which is really good. The worst quarter for public REITs, or worst year for public REITs, was -25 and -19 for stocks. So really, since Fundrise has been in business, they have not had a negative year with their returns. Every single year that they've been in business, they've had returns and have had positive returns. And their best quarter was 9.4 for a quarter compared to REITs and public stocks. And they've had 0 negative quarters. And the average income return is 5.4% compared to REITs and stocks. Now, dividends. I know dividends are very important to people, and people will go to stocks for dividends, and they say maybe a good stock, maybe 3 to 4% dividends. Some can get up to 6 or 7, but it'll be a more riskier company to invest in. But very stable, good investment for dividends and companies will be around 3 to 5%. Now, as you can see in through this picture right here, income through dividends, on average with your income, if you selected the income investment plan, you will get a 7.46 dividend return. So really that's really good and beats a lot of good stocks that you can invest in. Most people see that as some stocks that have high dividend to go invest in that, but really real estate's where a lot of your income can come from. And if you invest in balance, you'll get about 2.0%, which is not bad. And then growth, even though it's growth and you really seen those high returns and you really want to see the growth and returns, you're still going to get 1.7% return and not return, but dividends back. And as you can see on the right side, Fundrise has paid a boatload of money in dividends. And I mean, as you can see, dividends are very high when it comes to real estate and can give you a lot of income. Now, if you guys want to like what you're hearing and want to sign up for Fundrise, if you click the link below and you sign up through the link, you will get $50 free to invest into Fundrise, and they will take that money and invest it for you. And then, yeah, you'll just start investing and see how you like it. And let me know in the comments if you guys are investing in Fundrise or planning to invest in Fundrise. And tell me if you clicked the link, man. Comment if you clicked the link and let me know. So now, you probably want to know, what are the fees for this? What are they charging me to handle my money and manage it and invest it for me? Now, really, Fundrise is very low fees. I've been with Fundrise for almost a year now. barely paid any money in fees. As you can see from this photo, they charge 0.15% annual advisory fees for managing your account. So they don't charge transaction fees, sale commissions, additional fees for enabling features on your account, or such as dividends, reinvesting fee, or features like that. And they charge 0.85% annual management fees for managing the real estate funds, REITs and E-funds that make up Fundrise portfolio. In addition, we could potentially charge other fees such as development or liquidation fees for our work on a specific project. Dividend earned are net of any fund fees. So really their fees are extremely low. So you make a lot of money, you're really not going to pay that much in fees. I think I've paid maybe $5 in fees. And I'll show you my how much I've made through Fundrise and how much I put in a later video. And I have a slide at the end of the video that shows you how much is in, but I'll make a better video on how much I've made, how much income I've come through it, how much appreciation, and so on and so forth. Now, with Fundrise, you should really expect to hold this for 5+ years. Now, this isn't, like I was explaining earlier, this isn't a REIT. You can't just buy the stock or REIT and then sell it the next day. With Fundrise, you really want to look at a long-term horizon for this. So you put your money in, you really want to wait 5 years. Now, if you don't wait 5 years, 5+ years, Fundrise will charge you a penalty for taking your money out. But in reality, you want to know ahead of time. And when you put money into Fundrise, you're expected to wait 5 years. And now Fundrise, if anything was bad to happen in the economic market, they do have the right to say no to you from withdrawing. So if something bad was happening, the real estate was crashing, everyone was freaking out, and everyone was going to Fundrise just trying to take their money out, they could say no, we're not going to give you guys your money back, because they're not just going to go and just sell a bunch of real estate and basically lose a bunch of money. So really, Fundrise can tell you no from taking their money out. So it's really just depending on how the market is. If the market's really bad, they're going to say no, because they're not just going to want to go out and sell all their real estate just to give back the money to investors. But you will pay a fee if you try to take it out 5 years or less, and it's not a very big fee at all. So you really want to have that long-term outlook on Fundrise. So if you guys want to get into Fundrise, here's my portfolio. I have $6,500 basically in my portfolio. I've made $660. Now I recently switched my investment plan into long-term growth. I recently had it on balance, but you couldn't get long-term growth unless you were in I think you were in core. You have to be in core to get long-term growth. And right when I got into core, which is 5,000 plus, I believe, I switched to long-term growth. I really want more growth and appreciation. I'm not concerned on the income side of things. I really want in 5, 10, 15, 20 years to really be growing and really be having a lot of appreciation on these properties and through my money. So I hope you guys enjoyed that video. Check down below if you guys want to sign up for Fundrise. Click the link, you'll get a free $50. I appreciate you guys for joining. Like and subscribe. Peace out, guys.